The American dream hasn't just slipped away, it has been mathematically locked behind a paywall. Right now, a silent financial fracture is tearing through the middle class, pushing hundreds of thousands into the streets and forcing millions more into impossible daily choices. But this isn't just another economic cycle, it is a mathematical breaking point. And as we barrel toward November 2026, this exact crisis of affordability isn't just shaping dinner table conversations, it is about to systematically dismantle and rewire the entire United States government. As we get closer to 2026, the usual political playbooks are breaking down. Voters aren't motivated by standard talking points or abstract debates right now. Instead, a quiet panic over basic survival is driving the electorate. This chart shows the median home price shooting up and plateauing around $405,000. But when you factor in current mortgage rates at 6.11%, the total borrowing cost explodes. To afford this today without severe financial distress, a household requires a baseline income of $120,000. The market has evolved into a mathematical lockout of the American middle class. Millions of people who do everything right are now stuck in an endless cycle of high-yield renting because their salaries fall below that $120,000 line. That lockout forces a brutal downward pressure. We recently saw the US homeless population surge to a peak of over 1 million people. The sheer volume of that number is part of the story, but the internal data shows a shift in who is actually losing their homes. We are increasingly looking at fully employed citizens and older adults who have been completely priced out of their neighborhoods. These citizens are on the street because they cannot bridge the gap between their stagnant wages and aggressively soaring rents. The math simply stopped working. While the housing market gets all the headlines, a quieter inflation is draining the working class from the inside out. This graph illustrates a 41% increase in average household utility costs since the start of the pandemic. These are non-negotiable costs: electricity, water and heating. As those costs climb, basic monthly utility bills are starting to rival the average auto loan. This compounding pressure is forcing younger voters to abandon traditional milestones. Millennials and Gen Z are putting off marriage and abandoning the idea of building generational wealth. They are shifting into strict survival economics, taking on secondary gig economy labor and piling up credit card debt just to subsidize their day-to-day existence. An entire generation has been pushed into financial exile. The pursuit of the American dream has been traded for a daily crisis of solvency. When 50 to 60% of a family's take-home pay is immediately consumed by shelter and utilities, the local math breaks down. Discretionary spending drops to zero. Local restaurants lose their regulars, small businesses suffocate. The velocity of money grinds to a halt as capital is funneled straight into basic survival. This individual struggle quickly scales to an institutional crisis. Municipalities are currently stretching their budgets to the limit, trying to manage maxed-out emergency shelters and swelling unhoused populations. We are sitting on a knife's edge. A minor economic contraction, like a slight uptick in unemployment, would put massive pressure on this already fragile infrastructure. Local governments lack the infrastructure to manage a sudden wave of newly evicted citizens, leaving both the emergency shelter system and the city's solvency at a breaking point. This financial reality is spilling directly over into the political landscape, severing decades of traditional party loyalty. The electorate is operating on high-alert economic anxiety. Abstract ideological culture wars carry less weight when you're struggling to keep the lights on. Voters are now grading politicians on one specific metric. Are you making my life cheaper, or are you making it harder to survive? The affordability crisis has created the ultimate swing voter. This creates a friction point for any incumbent attempting to campaign on macroeconomic indicators like GDP growth or stock market highs. A family paying 41% more for electricity and locked out of a $405,000 housing market is unlikely to accept that the economy is thriving. The top-line numbers mean nothing to them. The 2026 elections will be decided by whichever political faction stops quoting Wall Street metrics and starts delivering aggressive, legislative solutions for housing supply and localized inflation. Candidates who cannot address that $120,000 paywall are asking for the support of a demographic that can no longer afford to give it. While politicians focus on televised debates about interest rates, a separate financial catastrophe is unfolding behind the scenes. The American housing market is undergoing a structural buyout, where traditional buyers are being replaced by institutional capital. This data from the second quarter of 2025 shows a record 33% of all single-family home purchases were made by investors. Armed with cash, these entities can ignore the high mortgage rates that have essentially frozen traditional family buyers out of the market. Residential neighborhoods are being repackaged into high-yield, speculative asset portfolios where houses function more like stocks than homes. This shift creates a structural barrier to wealth accumulation as residential equity flows into investor balance sheets instead of middle-class households. On the surface, the consumer economy appears to be functioning even as housing is hoarded and wages fail to keep pace with the cost of living. Americans are financing their own survival by relying on borrowed capital. By early 2026, total household debt climbed to a staggering $18.8 trillion. This reliance is visible in credit card data. The average American now carries $6,115 in plastic debt at a 21.52% interest rate. These balances are increasingly used for groceries, fuel, and the basic necessities of survival. This creates a deeply fragile economic ecosystem propped up by high-interest debt and one missed paycheck away from collapse. While the residential market is squeezed, the commercial real estate sector is actively failing. By January 2026, the delinquency rate for office loans skyrocketed to a record 12.34%. This is a higher failure rate than this sector experienced during the peak of the February. For years, lenders used a strategy called extend and pretend, rolling over toxic office loans and hoping the remote work trend would reverse. That strategy is meeting a mathematical wall in 2026, and less than half are expected to pay off in full. The bad debt can no longer be hidden. The institutions holding these loans are now facing inevitable, catastrophic losses. These losses are hitting the regional and community banks that focused heavily on commercial lending. As these banks absorb massive haircuts on empty office buildings, their ability to provide capital to local small businesses and entrepreneurs effectively freezes. Local governments are being squeezed from both sides. They are facing collapsing property tax revenue from vacant downtowns while trying to manage a growing unhoused population. Following the Supreme Court's Grants Pass decision, many municipalities are responding by criminalizing public camping and arresting citizens who have been priced out of the housing market. Citing and fining the unhoused doesn't fix the underlying affordability crisis. It merely moves the financial burden from the streets to the taxpayer-funded prison system. Cities are approaching fiscal insolvency. With revenue falling and law enforcement costs rising, the pressure for federal intervention is mounting. These individual, institutional, and municipal pressures will all converge at the ballot box in November 2026. Voters are entering the midterms with exhausted credit limits, depleted savings, and neighborhoods increasingly owned by faceless investment firms. This scale of financial pressure often overrides abstract cultural or political grievances, creating a focus on the math of survival. Candidates are being tested on specific financial solutions, plans to overhaul commercial debt, cap consumer interest penalties, or restrict institutional home hoarding. Politicians who preside over historic levels of debt and default without offering tangible relief face an electorate with a powerful incentive for change. An establishment that oversees an $18.8 trillion debt trap and a collapsing commercial sector cannot mathematically expect the status quo to hold. In 2024, over 148 million Americans cast their ballots in a massive, nationwide display of the democratic process. Yet the control of the entire US House of Representatives was decided by a margin of only 7,000 votes. Those deciding votes were hyper-concentrated in just 3 specific districts spread across Iowa, Pennsylvania, and here in Colorado. For the vast majority of the country, representation is a mirage. Millions of citizens are watching a performance while locked out of the narrow margins where national power is actually held. When the middle class collapses and the economy turns hostile, the standard response is to vote out the politicians responsible. But the architects of our political system have engineered a defense mechanism against voter fury, the calculated death of the swing district. Out of 435 seats in the House, only about 43 are genuinely competitive. This means roughly 90% of congressional elections are mathematically decided before a single ballot is cast. Politicians are no longer competing for your vote. They have built an impenetrable firewall to structurally isolate themselves from accountability. Today's electoral maps are weaponized using algorithmic precision, layering hyper-specific voter data to carve up neighborhoods block by block. Political operatives rely on packing, where they neutralize opposition voters by cramming them into a single, isolated district. They pair this with cracking. The remaining opposition is sliced apart and diluted across multiple districts to ensure they can never achieve a majority. To draw these lines, mapping software utilizes consumer habits, property records, and digital footprints to identify exactly who lives behind every door. This algorithmic engineering creates a synthetic democracy. Politicians handpick their voters rather than the voters picking their politicians. One of the most insidious methods of rigging the map utilizes federal demographic data from the US Census Bureau. The census counts incarcerated individuals as residents of the facility where they are held, rather than their actual home communities. Operatives exploit this by building massive correctional facilities in sparsely populated rural areas to artificially inflate the local population count. Because these incarcerated citizens cannot vote, the local politicians inherit the legislative clout and federal funding attached to their numbers. This transfer of data siphons political power from urban centers and concentrates it within the rural districts housing these facilities. When general election competition is mathematically eliminated, the psychology of the politician shifts from public service to partisan survival. If a district is engineered to guarantee a 20 victory in November, the incumbent's only vulnerability is a primary challenge. These closed primaries are dominated and controlled by the extreme fringe of the politician's own party. This structural flaw actively disincentivizes lawmakers from solving the affordability crises of the working class. The system punishes compromise. Collaborating across the aisle is treated as a career-ending betrayal by the partisan extremes that control the gates. What happens when citizens sue because these map-rigging tactics? Policies. Even when an independent court strikes down a map, politicians deploy the strategy of judicial defiance. State legislatures drag their feet, appeal endlessly, and submit slightly altered maps until the election is too close to change the ballots. Judges are eventually forced to allow the election to proceed on maps they have already declared illegal, rewarding the politicians with another term in power. The American public is being squeezed by a hostile economy, yet they are trapped within an electoral system mathematically designed to ignore their suffering. We are barreling toward a legitimacy crisis. In 2026, voters will arrive at the ballot box desperate to eject the establishment, but they will find that the maps have been pre-rigged to render their votes useless, leaving them with no mechanical way to demand change. This frustration will transcend normal partisan bickering as the public realizes the primary lever for economic relief, the vote, has been disconnected. When a republic systematically barricades the ballot box to protect its incumbents, it is no longer functioning as a democracy. It is operating exactly as designed, as a cartel.